Hello everyone, welcome to the Alpha Hustle. Here is a weekly analysis of Nifty and Bank Nifty on how market auctioned last week with important references and potential scenarios that may likely to play out in the indices next week. So let's quickly get started.
Alright, so let's start with the review of Nifty. Ever since the buyers stopped the one-time framing to the downside and started one-time framing to the upside during the month of May, we continued to one-time frame higher, reaching the highs of the prior month. The only exception though was during the month of July where we had a freak highs formed around 16,500. So we are kind of trading within the July's range. Wouldn't pay much of an attention to this freak highs that were formed in the July. Despite we are trading during an inside month, I would still say that the market is one-time framing to the upside. We see a strong momentum from the longer-term time frames. Who's interested to auction higher? The only concerning factor though, below par volumes, where I would have expected the volumes to be slightly higher than what we are currently having. In any case, the trend on the longer term time frame is to the upside. So on the weekly chart, freak highs that was formed during the month of Feb at 15,524. So market kind of struggled within a range during Feb, March and April. However, eventually the buyers headed slowly towards these freak highs and they were able to successfully retest this and eventually got a breakout and started to trade above 15,524. So we have had an 8-week balance within which the market traded over the last couple of months, bearing the fact that we had this freak highs that was formed early July, but pretty much the market traded sideways between 15,500 and 16,000 levels. During last week, we had a successful breakout, some decent volume expansion, suggesting that the intermediate time frame is trading to the upside. So there is strong momentum and interest by both the longer term timeframes as well as the intermediate term timeframes to auction higher. So this zone of 15,500 to 15,524 is likely to act as a demand zone going forward, which has been retested during the last couple of months where the buyers defended this zone, start the auction higher. As we have seen in the weekly charts, we had a nice range that was formed for the last 8 weeks or so, where the market pretty much traded between 15,500 and 16,000 levels, where the swing high that we had during the month of July was 15,930, where supply came in and the buyers struggled at that point and got exhausted to head higher. That resulted in a liquidation of week longs towards the balance low. We eventually formed a lower high and then headed towards the retest of the demand at 15,500, which has been successfully defended by the buyers. So this zone was defended multiple times and it is going to be a strong reference going forward. This swing pivot is important for the buyers to hold. So as long as the 15,500 holds, the trend on all the different time frames is to the upside. So after sellers getting failed around 15,500, stopped the one time framing to the downside and started the one time framing to the upside during the last week. So this supply that came in during the month of July has been taken out with this wide range candle with some great volume expansion. So this is a clean breakout that we had out of this 8-week range. The market is successfully getting accepted and trading above 16,000 levels. We had a stretch of about 600 points just within 3 or 4 trading sessions. So as expected, the market is sort of balancing for the last 3 sessions. So this is an important balance that needs to be viewed for next week's auction. So clearly the market is trending on all the different time frames. This could be a potential exhaustion with the market trying to consolidate after having such a great momentum. If the buyers continue to get exhausted around 16,300, 16,350 levels, we may have an inventory adjustment of week longs, retesting the gap that was left, forming another lower swing pivot before heading higher. So broadly, this is the market where you got to buy the dips. So any dip towards 16,000, 16,100 is a nice opportunity to get on the longs. And as long as the market stays above the 15,930, which was the prior swing high, we could still expect auction towards the upside. So in terms of the cumulative open interest, we got a nice balance that we talked about where the market traded over the last 8 weeks, post which we have got a nice breakout that is supported by very good expansion of cumulative open interest, suggesting that the breakout that we had was at the back of strong buyers. So nice expansion of the bull volume along with the cumulative open interest that has been built up. So these are some strong buyers that are likely to defend any dip towards the 16,000 levels. So this HVN that was left at 15,800 to 15,900 levels is going to be an important reference to the downside. So any dip towards this HVN is likely to be a buying opportunity for the market to head higher. As long as this HVN holds, there is no risk for this swing pivot that was formed at 15,500. In case if this HVN breaks, we are likely to head towards a retest of the swing low. So as we have seen that the market is clearly trading higher, pretty much in a channel. The only concerning factor though in this entire up move is that the RSI and the MFI failed to make higher highs despite price making higher highs. So I would have expected the RSI also to form a higher high, which they failed. So this is something that you'll have to keep at the back of your mind. It doesn't absolutely mean that you'll have to go and short this market, that we have got a negative divergence. So this is just one piece of the puzzle. So always stay with the trend as long as the trend remains intact. All right, so now let's look into the market profile charts to see how the market auctioned during the last week. So in case if you're not aware of what market profile is, I've got few videos up on my channel for which I'll leave the link in the description below as well as in the iCard above. So the market started off on a positive note where the buyers drove right into the supply zone of 15,900 to 15,930 that acted as a resistance or the prior swing high. On the subsequent day, market had a nice breakout. So this is a proper trend day where the market formed a triple distribution with some great volumes. So this breakout has got some longer term time frame buyers. So as long as this range holds, any dips towards these lower distributions of 16,050 or 16,000 are likely to be a good buying opportunities. So on the subsequent day, market opened higher, sellers failed to fill the gap and eventually formed a balance with some poor highs. So these poor highs have been taken out on the subsequent session, which again is a not clean structure with some ragged edges here and there, as well as a poor highs up top. So these are the initial signs of exhaustion by the buyers after getting a 600 point move. On Friday, we had an inside day, and this is the lowest of the trading ranges over the last 4 sessions, forming an NR4. So there will be a nice trading opportunity for Monday or Tuesday in the direction of this NR4 range breakout. So if the buyers open strong and starts to take out these highs of Friday, we're likely to head for the retest of the poor highs that were left on Thursday and then eventually head higher into the fresh all-time high territory zone. If you merge all these 3 profiles together, you could see that there is a HVN formed at 16,250 to 16,260 levels. So which is a HVN that will be an important reference for next week's auction. So as long as the buyers continue to stay above 16,250, we are likely to retest the swing highs and the poor highs at 16,350. In case if the buyers fail to hold 16,250, we are likely to head towards these poor lows that were left on Thursday and Friday and eventually revisit the gap below 16,200. All right, so now let's move on to the Bank Nifty. On the monthly charts, unlike Nifty, Bank Nifty is really struggling to head towards the all-time high territory. Though the one-time framing to the downside has been stopped and the one-time framing to the upside has been started, market has been pretty much trading within a 2,000 point range for the last 3 months. So this zone of 34,000 to 36,000 was kind of the trading range for the last 3 months. And the volumes have been drying up, suggesting that this is one of the weak counters. However, if Nifty has to head higher, so this is the underperforming index that should perform well this month in order to take Nifty higher. So let's keep an eye on Bank Nifty, especially trading around 36,000 levels. So in case if we do get a breakout above 36,000 levels, then we are likely to head for the retest of the all-time high levels at 37,700. In case if the buyers fail to take out the 36,000 levels, we are eventually looking at Bank Nifty heading lower and obviously taking Nifty lower with it as well. So similar to what we have seen in Nifty, Bank Nifty has been trading within a range for the last 10 weeks. So we had a kind of a mini breakout above the 36,000 levels. However, the buyers are really struggling to take out this level and start to find acceptance above it, similar to what we have seen in Nifty with a big wide range candle with volume expansion. Even the volumes were not so great. However, it's decent when compared to what it was during the prior weeks, but it is not as good as what it was in Nifty. So in terms of the structure, we still have a strong bullish structure on Bank Nifty too, forming higher highs and higher lows. So after a lot of struggle, we eventually formed a higher high at 36,275 during last week. However, in subsequent days, market couldn't get a follow through above the 36,000 levels. On Thursday as well as on Friday, market tried to probe above the 36,000 levels, but eventually got a closing below 36,000. So it is important for the buyers to get some follow through and momentum to the upside. So the important reference to watch out for Monday's auction is this 2-day balance. So in case if market breaks out of this 2-day balance to the upside, eventually we are looking at a breakout above 36,000 levels finally for the market to head higher. In case if the buyers fail and the sellers take the control of the auction and starts to one time frame to the downside, we are looking for a potential higher low yet again before the buyers gain some strength to push the market higher. So the important reference to the downside is obviously going to be this swing pivot or the swing lows around 34,000, 34,100 levels. So as long as this holds, we're potentially looking at the bullish structure being strong and the buyers attempting to head higher. So as we discussed, we have got a HVN at 36,000 level that was formed back in Feb, so which is now acting as a resistance zone. So it is important for the buyers to take out this HVN and start to find acceptance and get a spike above 36,000 levels to head higher. Otherwise, if the market starts to exhaust around 36,000 levels, we are soon going to have an inventory adjustment of week longs before heading higher. For the up move to sustain as well as for the structure to remain intact, the buyers should hold on to this HVN at 35,000 levels. So as long as the market stays above 35,000 levels, we could still continue to buy into the dips with the view of market auctioning higher. In case if 35,000 gets compromised, eventually we are looking at the retest of the swing lows at 34,000. Now let's move on to the market profile charts. Towards end of July, we formed a nice composite with a prominent point of control at 34,660. So during the last week, market opened right into this composite where the sellers tried to probe lower. However, the buyers stepped in right at this composite point of control to push the markets higher. On the subsequent day, market opened again within this composite. However, this time around, the buyers were a little aggressive in pushing the market higher, though it is not as good as a trend that we had within Nifty, considerably okay, forming a balance during the first half of the day and eventually getting a spike to the upside towards the end of the day. On the subsequent session, market opened higher with a gap. Sellers failed to fill the gap, and this time around, the buyers were aggressive enough to push the market towards the important reference of 36,000. So all the poor references that we had from the prior months around the 36,000 levels have been cleared off during the auction on the 4th of August, forming a swing high for the very short term. However, on the subsequent sessions, as we have looked earlier, the market really struggled to get a follow through above the highs of 4th of August. So the auction for Monday is with respect to this 2-day balance that we have formed on Thursday as well as Friday, where the composite point of control is going to be 35,940. So this will be an important reference to watch out for us. As long as we get an opening above this level, we could look out for an auction towards this balance high. In case if the buyers are good enough to find acceptance above this balance high, we are up for an auction above 36,275, which was the prior swing high on the 4th of August. The second scenario is if the buyers look above the balance, fail to get acceptance and falls back into the balance, then eventually we are looking at the retest of balance low towards 35,775. Any acceptance below this balance is likely to head for the retest of the gap. It was left at 35,400, and this HVN that was left on the 3rd of August during the end of the day spike is an important reference to watch out for. In case if this gets taken out, we are eventually looking at falling back towards 34,600 and 34,800 levels. So the scenarios for Monday or next week's auction, basically the balance rules that we'll have to follow. Market is going to be choppy as long as we stay within this balance. If the buyers are good enough to probe the balance high, any acceptance above balance high is likely to head higher. In case if the buyers fail above the balance high, the destination trade for that failed auction is going to be balance low. So similarly, in case if sellers are aggressive enough to take out 35,940 during the morning session and starts to probe the balance low at 35,750, Any acceptance below 35,750, we are likely to head for a retest of the gap at 35,400. In case if the sellers fail below 35,750, the destination for that would be the balance high at 36,200 levels. That's all for today. I hope this information has been helpful. If you find this content useful, please do like, share, and subscribe. Thank you.